The Chinese yuan, also known as the renminbi, has plunged to its weakest level against the US dollar in over 17 years. This significant drop marks a historic low, reflecting the mounting pressures on the Chinese economy amidst global uncertainties. This decline is a significant development in the global financial market, reflecting the escalating trade tensions between the world's two largest economies. The trade war has intensified, leading to a series of economic confrontations that have shaken investor confidence. The yuan's depreciation is a cause for concern for investors and policymakers worldwide, as it could have ripple effects on global trade and economic growth. Investors are particularly worried about the potential for a prolonged economic slowdown in China, which could impact global markets. The current situation is a culmination of several factors, including the ongoing trade war between the US and China. The trade war has led to increased tariffs and economic sanctions, further straining the relationship between these two economic giants. The US has imposed hefty tariffs on billions of dollars worth of Chinese goods, prompting retaliatory tariffs from Beijing. These measures have disrupted supply chains and increased costs for businesses and consumers alike. This tit-for-tat exchange of tariffs has created uncertainty in the global market, weighing heavily on the Chinese currency. The volatility in the stock markets reflects the broader economic instability caused by these trade tensions. The yuan's depreciation is a complex issue with far-reaching implications. It affects not only the Chinese economy, but also has significant repercussions for global trade and investment flows. Understanding the underlying causes and potential consequences is crucial for investors and policymakers alike. They need to navigate this challenging landscape with informed strategies to mitigate risks and capitalize on potential opportunities. The following sections will delve deeper into the US-China trade war, its impact on the Chinese economy, and the measures taken by Beijing to mitigate the damage. We will explore the strategies employed by both nations and their potential long-term effects on the global economy. The trade war between the US and China is rooted in a complex web of economic and geopolitical factors. This conflict has far-reaching implications, not just for the two countries involved, but for the global economy as a whole. The US has long accused China of unfair trade practices, including intellectual property theft, forced technology transfer, and currency manipulation. These practices, according to the US, give China an unfair advantage in the global market. These accusations have been a source of tension between the two countries for years, culminating in the current trade war. The conflict has seen multiple rounds of negotiations, with both sides struggling to reach a consensus. The Trump administration's decision to impose tariffs on Chinese goods marked a significant escalation in the trade dispute. These tariffs targeted a wide range of products, from electronics to clothing, affecting various sectors of the economy. The tariffs were intended to protect American jobs and industries from what the US perceived as unfair competition from China. The goal was to reduce the trade deficit and encourage domestic manufacturing. However, they have also led to higher prices for consumers and businesses in the US, fueling inflation and slowing economic growth. Many American companies have had to absorb these costs, leading to lower profit margins. China, for its part, has denied the US accusations and retaliated with tariffs of its own on American goods. These retaliatory measures have targeted key American exports such as agricultural products and automobiles. The trade war has had a significant impact on both economies, disrupting supply chains, raising costs, and creating uncertainty for businesses. Companies on both sides have had to navigate a new and challenging trade environment. The yuan's depreciation is one of the most visible consequences of this ongoing conflict. This devaluation has made Chinese exports cheaper, but it has also added to the volatility in global financial markets. The US tariffs have had a tangible impact on the Chinese economy, slowing down growth and putting pressure on the yuan. China's export-oriented economy has been particularly vulnerable to the tariffs, which have made Chinese goods more expensive in the US market. The tariffs have also disrupted supply chains and forced businesses to adjust their operations. This has led to increased costs for Chinese manufacturers, some of whom have been forced to relocate their production outside of China to avoid the tariffs. The Chinese government has taken steps to mitigate the impact of the tariffs, including providing subsidies to businesses and weakening the yuan to make Chinese exports more competitive. However, these measures have had limited success, and the tariffs continue to weigh on the Chinese economy. The Chinese government is facing a delicate balancing act as it tries to stabilize the yuan, which has been under significant pressure due to various economic factors, and support its economy in the face of US tariffs. A weaker yuan makes Chinese exports more competitive on the global market, potentially boosting sales abroad, but also risks capital flight and inflation. The People's Bank of China, China's central bank, has intervened in the currency market to slow the yuan's decline, aiming to maintain economic stability. It has also injected liquidity into the financial system, ensuring that banks have enough funds to lend to businesses and consumers, and cut interest rates to support economic growth. However, these measures have had limited impact, as the global economic environment remains challenging, and the yuan has continued to weaken. The Chinese government is also trying to boost domestic demand by encouraging consumer spending and investment. To offset the impact of declining exports, it has announced plans to increase infrastructure spending, which includes building new roads, bridges, and other public works, and provide tax cuts to businesses and consumers, aiming to stimulate economic activity and support small and medium-sized enterprises. However, it remains to be seen whether these measures will be enough to offset the negative impact of the trade war, which continues to weigh heavily on the Chinese economy. Section 5. The global trade ecosystem caught in the crossfire. The US-China trade war has sent shockwaves through the global trading system, disrupting supply chains, increasing costs, and creating uncertainty for businesses worldwide. Countries that are heavily reliant on trade with either the US or China have been particularly affected. The trade war has also fueled protectionist sentiment around the world as countries seek to protect their own industries from what they perceive as unfair competition. This has led to an increase in tariffs and other trade barriers, further hindering global trade growth. The International Monetary Fund, or IMF, has warned that the trade war is a threat to global economic growth and has urged the US and China to resolve their differences through dialogue and cooperation. Section 6. A long-term perspective. Decoupling and the future of global trade. The US-China trade war has accelerated the trend of decoupling between the world's two largest economies. Decoupling refers to the process of reducing economic interdependence, and it can take many forms, including reducing trade, investment, and technology transfer. The US government has taken steps to decouple from China in certain strategic sectors, such as technology and telecommunications. It has also imposed restrictions on Chinese investment in the US and limited the access of Chinese companies to American technology. China, for its part, is also seeking to reduce its reliance on the US, particularly in areas such as semiconductors and artificial intelligence. It is investing heavily in research and development and seeking to develop its own technological capabilities. Section 7. The domestic impact. Chinese consumers and businesses brace for impact. The trade war and the yuan's depreciation have had a tangible impact on Chinese consumers and businesses. The prices of imported goods have risen, and businesses that rely on imported components have seen their costs increase. The Chinese government has taken steps to mitigate the impact on consumers, such as providing subsidies and price controls. However, these measures have had limited success, and the cost of living in China has continued to rise. Businesses, particularly small and medium-sized enterprises, have been hit hard by the trade war. Many SMEs rely on exports to the US for a significant portion of their revenue, and the tariffs have made it difficult for them to compete. Section 8. Beyond tariffs. Exploring alternative solutions. While tariffs have dominated the headlines, it is crucial to recognize that they are not the only tool at the disposal of policymakers. Addressing the US-China trade imbalance requires a multifaceted approach that goes beyond simply raising or lowering tariffs. One potential avenue is to strengthen the World Trade Organization and its dispute settlement mechanism. The WTO provides a forum for countries to negotiate trade agreements and resolve trade disputes. However, the organization has been weakened in recent years, and its dispute settlement mechanism has been paralyzed by the US. Another approach is to focus on areas of common interest, such as climate change and global health security. Cooperation in these areas could help to build trust and create a more positive dynamic between the US and China. Section 9. The road ahead. Predictions and uncertainties. The future of the US-China trade relationship remains uncertain. The trade war has entered its 5th year, and there is no end in sight. Both sides have dug in their heels and neither seems willing to make significant concessions. Some analysts believe that the trade war could continue for several more years, with no clear winner. Others believe that the two sides will eventually reach a deal, but that it is likely to be a limited one that does not address the underlying issues in the relationship. The outcome of the trade war will have significant implications for the global economy. A prolonged trade war could lead to a global recession, while a resolution could boost global growth. However, even if a deal is reached, the US-China relationship is likely to remain strained for the foreseeable future.